What's going on, guys? Welcome back to another video, and in this one we're going to be going over how Robinhood has absolutely fucked retail investors. So when we think about what has kind of gone on with Robinhood over the last 2 years, I think a lot of my audience really understands what has happened, especially with the January 2021 situation with the buy button getting removed. Now, there's a couple of different things that have gone on here that I kind of want to go over with you guys. But there's a way to get back at these institutions who have completely screwed over retail investors and to really show them that retail investors, sometimes called dumb money, going against the institutional money, sometimes called smart money. Well, retail investors really aren't all that dumb at all. And we're going to show you guys a way to actually kind of get back at these institutions, specifically Robinhood here. So again, if you guys don't mind dropping a like down on this video here and commenting down below what your guys' opinions are of Robinhood at this given time, and subscribe for more videos like this. So let's get right into it here. When we come over to this page, recently with Robinhood, we have received a couple of interesting pieces of news. On Tuesday, the company announced plans to cut almost a quarter of its staff, citing economic uncertainty, a steep sell-off in cryptocurrencies, and a deteriorating market environment. So first, Robinhood, like a lot of other companies out there, are struggling to keep their entire workforce. So they're laying off employees. They might be able to save a little bit of cash from this, but there's a report that has recently come out from Robinhood, and it's not the earnings report. It's something slightly different that I want to draw your attention to. When we come over to their June 2022 metrics, there's a couple of things that we kind of need to define first. It's assets under custody and net deposits. We define assets under custody as the sum of the fair value of all equities, options, cryptocurrencies, and cash held by users in their accounts, net of receivables from users as of a period end on a trade date basis. Net deposits and net market gains drive the change in AUC in any given period. We define net deposits as all cash deposits and asset transfers received from customers, net of reversals, customer cash withdrawals, and other assets transferred out of our platform. So now that we kind of understand what some of these terms mean, let's actually go up and take a look at what has actually happened to Robinhood customers over the last 6 months. When we scroll up here and we take a look at total AUC in this column going across, at the end of 2021, there was about $98 billion of assets on being held through Robinhood and on their platform. What is that number today, or at the end of June, the most recent reporting period that we have? 64.2 billion, meaning that Robinhood customers as a whole on average are down about 35%. Now, again, the overall market conditions have not been that great. We've seen fears of a recession. We've seen rising interest rates. We've seen the Russian-Ukraine conflict. There have been a lot of things that have been kind of weighing down on the overall market here. But retail investors don't have to get hurt from this. There's no reason that retail investors can't be the most nimble out of any player in the market. Again, some of these really large institutions that are taking big losses, they have to deal with concepts such as slippage, or it's really difficult for them to get in and out of positions very quickly. Retail investors, it's a lot different. They can flip in and out of a position very quickly, not move the market, and influence their average fill price. So there's a couple of things that I want to show you guys in order to kind of get back at these institutions and show everybody that retail investors aren't as stupid as everybody thinks they are. So what I first want to show you guys is the chart of the SPY over here. Now, this is going to be what we talk about all of the time in our group, and it's 1348. It's the most profitable EMA crossover strategy as studied by many different sources. You guys can look it up. I've shown you guys in many videos before, but I want to show you guys what has happened this year if you guys were kind of following along with this strategy. The most recent aggressive cross down that we have seen on this 4-hour time, or the daily time frame here, is going to be back in April. Now, if you are swing trading, remember, retail investors most of the time are not going to have the ability to essentially be able to sit at a computer all day long and trade. So swing trading is going to be something that is going to benefit them a lot. And that's exactly what this daily time frame is going to enable you to do. Well, you see this cross down. The blue line has then crossed below the red line here, the 48 EMA, the yellow line, the 200 EMA. You see a closing candle down below. And what is the drawdown that you see all the way down to the bottom? Well, let's say you're getting in on the middle of this candle here. You come all the way to the bottom. A 16% drop in the overall market. Well, when you think about if you are trading options, retail investors may not be actually going out and shorting stocks. If you are trading options during this time, you are making hundreds of percent on put contracts going to the downside. And all you had to do was put these indicators on your chart or get alerted like we provide you guys when any of these crosses are happening on the daily time frame, the 4-hour time frame, the 5-minute time frame, if you do have a little bit more time during the day. All you had to do was really just take a look at the charts here, and they told you exactly what was going to happen with the market. Combining that with a little bit of an analysis on, okay, we are going into a rising interest rate environment. We have fears of a recession. We have high inflation. The markets probably are going to come down. Being on a platform like Robinhood, where you can't even see a chart like this, is going to hurt retail investors. Now, I want to also give you guys a little bit of a sneak peek into something that we've been working on. So again, if you are interested in getting all of these alerts on over 450 stocks, the 55 private live streams a month, the whole built out learning curriculum that goes more in depth to this strategy, make sure you check out that link down below. But I want to show you guys something that is going to turbocharge retail investors even more than this strategy already does. When we come over to my Twitter over here, this right here is a screenshot of the trial run of our new algorithm. So we do provide a couple of algorithms to you guys in our group as well. The first one, Trader Joe, he's trading on the daily time frame. He provides, he's included all of the 1348 rules in every single trade that he's taking. So you can kind of view those trades as more high quality. Now, when you're looking at this here, this chart and this account has only been open for about 3 weeks. Started with 100,000 on a paper account to test this out to make sure everything is good to go. And he's up 24%. Now, we call this Pythagoras. So this is on the daily time frame, and it basically has what we like to call our Invictus software on it, which is able to kind of predict things as they are about to happen. So when you're looking at this right here, retail investors have the ability and have all come together to basically say, fuck you to all of these institutions out there that are saying, one, retail investors are stupid, and that they just like to go trade on the fancy platform Robinhood. When you look at all of the different things combined here with what retail investors are actually doing, and then you see the results actually on Robinhood, it honestly makes me feel sick because it doesn't have to be that way. You don't need to see retail investors taking losses, because thinking about what's going on in the overall economic environment right now, retail investors are going to be the ones that are going to be struggling the most. High inflation, lots of different companies are laying off employees, and seeing that on Robinhood's platform that retail investors are down 35% in their investment accounts this year. It does not have to be that way. So again, guys, if you are interested, check out that link down below. But again, I want you guys to fully understand that Robinhood, in some of these platforms, you really have to understand what you're getting yourselves into when you are trading on some of these platforms. Robinhood is not going to provide you the type of analytical power that you need to. There are tons of other platforms out there. And again, Robinhood, with their payment for order flow, with their relationship with these shady market makers who are limiting price discovery anyway, are not out there to help retail investors. So that is going to kind of wrap up this review on what has recently happened with Robinhood. If you did enjoy the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. If you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next one. Peace.